Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So, to our brothers and sisters in Tanzania, habari yenu, karibuni sana. To our brothers in Uganda, welcome. Let's get this done. So today we'll be talking about one item that is highly anticipated in the market, and that is the Bank of England interest rate decision. So we know that the Bank of England has been bittersweet for the good part of the year, where on one side, sometimes they go for a rate cut, sometimes they pause, another rate cut, and then pause. And today, it's largely expected that they will be cutting interest rates. So we'll be diving into all that. We'll also try to cover what else to expect in the markets today. And once we cover these, we also dive into technical analysis, try to understand where the charts remain as of today, where the opportunities present themselves, and from there, hopefully, everyone trades from an informed perspective. So as always, this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So you can see most of you have already joined. I can see All Sports TV account is already in. Avogadro from UG, welcome. You can see Justus Chalo is in the house. So we'll be diving into these in a few. So just give me a sec. All right. So from what we can see on this CNBC article, Bank of England rate cut across call ahead of the autumn budget. So economists are widely predicting that a majority of the Bank of England's 9-member Monetary Policy Committee will vote to keep interest rates unchanged. So we are not expecting much of a change today. So assuming the Bank of England does not hold rates on Thursday, economists predict a cut will come in February or maybe as soon as December. So the Bank of England's meeting comes ahead of the autumn budget, which will be happening on the 26th of November. So we can never know for sure which way the meeting will go, but this one is one of the hardest to call for some time. So it's not a case of whether they will cut interest rates at some point. The answer to that is yes. We believe they will. If policy is tight, inflation is falling, and growth is lackluster, then interest rates are going to come down. The hard part is anticipating when. So economists have forecast for the most part that the majority of the Bank of England's 9-member Monetary Policy Committee will vote to keep its key interest rate, known as bank rate, unchanged at 4.0% on its November meeting. So clearly, we don't expect much of a change. So let's think about the central bank mandate. What is the mandate of the central bank of the UK? So we'll be starting with inflation metrics. So we know that the Bank of England has an inflation target of 2%. So normally, when inflation is on the rise, moving above 2%, the central bank's action will be to move inflation back to 2%. And since they cannot influence production or prices in the markets, they influence the cost of money, and what they do is hike interest rates. So we saw this happening, especially during COVID. So when inflation was on the rise, where it peaked at 11.1%, the Bank of England was basically hiking interest rates. So to illustrate this, let's look at the interest rates. Just a sec. So as you can see, inflation peaked at 11.1% in October 2022. But then if you move to this other side and you look at interest rates, and if you look at October 2022, interest rates were at 2.25%, and the Bank of England kept raising interest rates to a high of 5.25%. So this is when inflation started subsiding, moving all the way back to around a low of 2%, and then an even further low of 1.7%. So upon achieving this goal of low interest rates, then the Bank of England started cutting interest rates again. So notice how this moved all the way down to 1.7%. So in September 2024, this is where we had the lowest inflation rate. And as a result, you can see in 2024, around July, they started cutting from 5.25%. So this was July 2024. So August, September, they kept cutting. And now in the most recent decision, in August 07, 2025, they cut by 25 basis points to 4%. Then they have been holding. So in the prior meeting in September, they held. And now in the current meeting in October, they are expected to still hold at 4.0%. So why is this happening? This is happening because, sorry, I wasn't sharing this. So they kept cutting, and the last cut in the month of August, September, they didn't cut, they held, and now they are expecting them to hold at 4%. So why is this happening? Why is the Bank of England holding interest rates at 4%? So one of the key answers can be found in what's happening in the inflation report. And as you can see, since September last year, when the inflation rate was within target of 2%, it was at 1.7%. We have had a gradual increase in inflation. Yes, there was a time it reduced to 2.8 and 2.6, but then we jumped to 3.5, and since then, inflation has largely remained above 3%. In this case, at 3.8%, approaching 4%. So it's not good to cut interest rates when inflation is rising. So why has the Central Bank of the UK basically cut interest rates twice this year? So this has nothing to do with inflation. It has to be another metric, and that other metric is the job market. So the central bank has a secondary mandate, and that mandate is to ensure that there is a full employment. For instance, during COVID, when the unemployment rate was highest, hitting a high of 5.3%, I believe so. Yes, 5.3%. During COVID, when there was a shutdown, unemployment rate jumped from 3.9 to 5.3%. So with this jump, the central bank had to cut interest rates, and they really cut them fast so that the job market improves. And we saw the job market improving and the unemployment rate dropping all the way to 3.6%. So the interest rate cut can be seen here. Let's see. This was 2020. They were at 0.75%. Then they cut down to 0.1%. So this was the huge cut from 0.75% to 0.1%. So that cut facilitated the COVID economic recovery. So in Kenya, we cut interest rates to 7.0%. In the UK, they cut to 0.1%. That's the central bank rate. So now knowing that, that they had to cut interest rates to boost employment, now you can compare with what is happening today, where the unemployment rate jumped from 4% and kept going up, and it's now standing at 4.8%. So that's quite big growth in unemployment, and that's a very big worry for the UK economy. Even politically, it's very undesirable. So while the Bank of England has been cautious in cutting rates, the rising unemployment is still a worry, and they need to continue cutting, though with a bit being careful. So that's why we're expecting some form of a rate cut, but next year, this time we're expecting that a majority of the members will be voting to hold interest rates steady. So as we discussed on Monday, the focus for the meeting today will not be whether the Bank of England members will be holding rates steady at 4%. What we'll be focusing on is the votes. So the first number here represents the members who are expected to vote for a rate hike. So out of 9 Monetary Policy Committee members, none of them is expected to vote for a rate hike. So the second number is the ones who are voting for a rate cut. In this case, we have a minority of 3 who are expected to be voting for a rate cut. And then on the last number here, these are the members who are expected to vote for holding interest rates steady. And this is literally 6 members, which forms a majority. So in the prior meeting, there was a majority of 7 to 2. 7 members voted to hold interest rates steady, and 2 voted for a rate cut. So now you can see that 1 member has shifted from holding and has gone for a rate cut. That's why we are looking at 2 to 3. So 2 guys voted for a rate cut last time, and now we're expecting 3 guys to vote for a rate cut. So what if we get a 4? If we get a 4, it's very close to majority, and that could shift the market sentiment about the next meeting by the Bank of England, and perhaps that could boost the pound. So assuming that the 4% hold is already priced in, the votes will matter more. So if we see more guys moving towards a rate cut, in that case, that could weaken the pound. Remember, rate cut is negative for the pound. If there's more members shifting to holding interest rates steady, then that could be the boost the pound is looking for. So across major central banks, you also have to understand that the UK pound or the UK economy still has the highest interest rates at 4%. Most other central banks have been aggressively cutting, with a key highlight being the Swiss National Bank, which cut to 0.00%. So on the forex side, if you look at how the market has been performing, you know that for today, the JPY seems to be the strongest, though with a slight margin, up 0.24% against the dollar. However, the New Zealand dollar seems to be the weakest, down 0.13% against the dollar. So on the week, that is since the week started, the US dollar has been dominating. We know the dollar has been really strong, and we have seen these other assets like gold, silver, US equities falling on the back of a strong dollar. So it's only the JPY that is slightly up against the dollar, whereas the New Zealand dollar seems to be the weakest, down 1.19%. But there seems to be some very strong recoveries happening, like these currencies recovering against the dollar. So year to date, that is since the year started, we know that the Swiss franc has been the strongest currency for the year. The euro has been close second, and then the UK was mainly the third for the better part of the year. That is the UK pound. But right now you can see it has been overtaken by the Australian dollar. So there seems to be some weaknesses ahead of their budget. So the gains where the pound at one point was up like 7.5% or even 8% to the dollar, now it's only up 4.43%, basically showing that the pound is losing ground to the dollar. So I believe that sums it up for what to expect in the Bank of England rate decision, where on one side, we may assume that the 4% holding steady is already priced in. But then there is also the, just a sec, there's also the, just a sec. Yes, there's also the number of voters and how they will be allocating their votes. That is the MPC members. So if we see a shift to more members favoring rate cuts, that weakens the pound, and more members favoring holding interest rates steady, that strengthens the pound. So on the UK stock market, that is the FTSE 100 index. You'll notice that a majority of their stocks have been green. You look at companies like Barclays, up 59% year to date. Arm Holdings is up 29%. Shell is up 19%. HSBC 43%, and many other companies are in the green. So that explains why the FTSE 100 index is trading near or close to its all-time highs. So in other news, looking at the calendar, I don't believe there is any other major thingy for the day. So yes, there will be the IVA PMI index for the Canadian economy coming up at 6 p.m. and Bank of Canada Governor Macklem speaking at 6:30 p.m. Of course, that could potentially move the Canadian dollar pairs. There will be a flurry of Fed members speaking this afternoon, ranging from FOMC member Barr, Williams, Hamack, or between 7 and 8 p.m. Then Waller at 11:30 p.m. So, of course, the summation of what they say will be expected to move the market. So 12:30 a.m., just past midnight, FOMC member Paulson, and 1:30 a.m., FOMC member Musalem. So this is 1, 2, 3, 4, 5, 6. So if you see 6 Fed members speaking, that is about to move the markets. The idea is to try and count their sentiments. So if they are pro-cutting interest rates, that weakens the dollar. And if they are pro-holding interest rates or even hiking interest rates, then that strengthens the dollar. So this will be a very key development in how the market reacts tomorrow on Friday, which will be on the November 7. Then we finish the week with Canada's employment change, since we don't have non-farm payrolls for this month, because the US government is still in a shutdown. So also tentative, we know that at some point the US government may potentially reopen if the negotiations become successful this afternoon. So you have to watch out for that, which could boost the market sentiment, and we could be seeing stocks, Bitcoin, and all these assets that were falling earlier this week making a recovery. So that will be a very important key development in the market. So other than that, I'm trying to see if there's any other highlights. German industrial production year over year, actual was negative 1%. Forecast was 0.1%, and previous was negative 4.20%. So quite an improvement, but missed forecasts. Trying to see what else is in the books. So the market took note of skepticism from several Supreme Court judges during arguments on the legality of Trump's sweeping trade tariffs. A ruling against the policy could roll back the duties with enormous impact on international trade as well as domestic spend. Meanwhile, AI-related stocks staged a comeback after a sharp pullback to start the week. AMD surged more than 2% after topping Wall Street expectations for its third quarter earnings, helping it lift other chip names like Broadcom, Micron, which rose to a 9% respectively. The rebound in AI shares helped the broader market recover from early week weaknesses that left all three major indices on pace for weekly declines, although major fears of an AI bubble have not fully abated. So earnings season remains in focus with the reports from WBD, Airbnb, and pharmaceutical and biotech firm Moderna due Thursday. Investors will also be eyeing the outcome of Tesla's shareholder meeting at 4 p.m. Eastern Time to discuss Elon Musk's proposed $1 trillion pay package. So for Tesla's traders, you have to know that this discussion is bound to bring in volatility in Tesla shares. A $1 trillion pay package is not easy, but we know what the guy has done in order to grow that company to its current valuation. So it's a deal that was agreed, though there are some parties who are against it. So other than that, I'm trying to see if there's anything I may have missed. Yes, US Air. So US orders 10% flights cut at major US airports due to shutdown. So we know the shutdown has become the longest in US history. So US Transportation Secretary Sean Duffy said on Wednesday that he would order a 10% cut in flights at 40 major US airports, citing air traffic control safety concerns as government shutdown hit a record 36th day. So the drastic plan sent airlines scrambling to make significant reductions in flights in just 36 hours, and passengers flooded airline customer service hotlines with concerns about air travel in the coming days. Uh, the shutdown, the longest in US history, has forced 13,000 air traffic controllers and 50,000 Transportation Security Administration agents to work without pay. The Trump administration has sought to ramp up pressure on Democrats to end the shutdown and has increasingly raised the specter of dramatic aviation disruptions to force them to vote to reopen the government. Democrats contend Republicans are to blame for refusing to negotiate over key health care subsidies. So shutdown amplifies staffing shortages. Tens of thousands of flights have been delayed since the shutdown began because of widespread air traffic control shortages. Airlines say that at least 3.2 million travelers have already been impacted by air traffic control shortages. So, for airline companies, we might be seeing some volatility, or that could already be happening as we speak. So, bonds trouble in the UK. Board investors call on Britain's reefs to double fiscal buffer. So, investors who are seeing more than $5 trillion in assets are urging British Finance Minister Rachel Reeves to double the size of the country's financial buffer against economic shocks in her November 26 budget. Amundi, Europe's largest asset manager, AXA Investment Managers, Alliance Global Investors, and Franklin Templeton want Reeves to increase the fiscal headroom she leaves herself to meet her budget rules to around £20 billion. That's around $27 billion. So three of them said raising income tax for the first time since the 1970s was the best way to achieve this. So they are basically pushing for a bigger tax hike, so that they have some level of safety, especially in the bonds markets, and that is a sound of trouble. So if you are a UK 100 trader, you should know that if we see some panic, it could spread in that direction. Trying to see what else I may have missed, but I don't see it. I don't think there's something we missed. So while we are at this, I would also urge you to still sign up for our Bullish Banter event. Remember, the Bullish Banter podcast has been running for 3 years straight. We have never held a physical event, and this time we'll be holding the first physical event. We'll be hosting a very hot forex debate. Which one is easier to trade? Is it forex? Is it indices? Is it commodities? Or is it forex? So we did a poll a couple of days ago, and a majority of the people said that forex is easier to trade. Closely second came in crypto with 23.7%, indices 23%, and commodities were the hardest 16%. Yet, I know most of you tend to trade gold as a favorite. I wonder why commodities were left in this poll. So the event will be happening on 14th, 14th November. So it's on my pinned post at Rufus KE on X. And for those attending the live session, I'll be posting a link for you to sign up. I'll be doing it on the live comment section. So let me check the comment section if there's any questions. Good question from Simon Gitonga. Good morning. What is the term PMI mean in a fluid market? PMI is short for Purchasing Managers Index. So it's a way of calculating what the procurement department in an entire industrial sector is doing. So it's commonly used to measure things like, let's say, we have manufacturing PMI. So in that case, you are looking at how many orders have been made in procurement departments across the entire economy, and this helps you track what will be produced in the near future. When you track this data across time, you can see growth in demand for, let's say, manufacturing products. So you can have services PMI, and you can have the combined PMI. So when you say PMI, Ivy is short for the Ivy League schools, which are universities that tend to collect data on the economy and then they share this with the market. So they try to track how many orders have been placed in both the manufacturing as well as the services sector. So when we see that the Swiss franc has rates at 0.00%, what does that mean exactly? So this means that the central bank is rewarding the interbank market with 0.00%. So when central banks cut interest rates to 0%, they are discouraging people from keeping money in the banks. Remember, for instance, in Kenya, when the central bank was at 13%, the commercial banks were giving even higher rates for fixed deposits. They would give you 6, 7%, basically encouraging you to keep your money in the bank because the bank can take your money and put it in the government bonds and earn higher reward. So when the central bank lowers this to 0%, they don't want the banks keeping money in their books. They want the banks redistributing this money to the economy. So since the Swiss franc tends to be one of the most stable currencies in the world, it tends to get a lot of demand, especially in uncertain environments. So when there's so much demand for their currency strengthens and it gets worse for the economy. In order to make sure that their currency retains strength, they usually lower interest rates to zero or even go into negative territory, completely discouraging saving in their currency. So think of Swiss franc as the banking capital in Europe, where a lot of investors and companies tend to put their money in because they feel and enjoy that kind of stability. Which website do you get that information? I think I've been sharing the websites like none of the websites is hidden, from Forex Factory to um, I think we have gone through a couple of websites. Perhaps maybe I need to do a thread of the websites. Uh, You mentioned about the possible US government reopening. At around what time can we expect to get the outcomes of the negotiations? How will the reopening affect USD and SP 500? So, a reopening of the US government, as we have seen in previous events, usually leads to a rally in US equities. That's the SP 500, the NASDAQ, and Dow Jones. So, the dollar usually remains a little bit unconcerned with the reopening. So the timing around it would mostly be around Congress time. Remember, this is a Congress issue, so you'd have to follow the Congress proceedings and updates. Good morning. There was an event scheduled for tomorrow. Is it still on? I believe this is the event I'm talking about. So the event is no longer on 7th, it's on 14th. 14th of November. I've shared a link in the comment section. Book your spot. Let's meet. Let's have a debate. There will be a lot to talk about, especially for the Forex, crypto, and commodities and indices trading community in Kenya. I believe we will empower each other through various discussions across the markets. So that being said, let's get into our favorite part of the presentation, and this is the technical analysis part. So we've had quite a volatility in the market, with the dollar making a very strong rally that lasted this six straight sessions. But then today we are beginning to see some weakness in the dollar, and some of the currencies are beginning to take advantage. So for AUD-USD, it went into a triangle yesterday and has extended that. And since the triangle is facing up, we call this a wedge. So we'll be tracking closely to see if there is some form of breakout. For gold, we already have a breakout in. I've been tracking this. Just happened a couple of minutes just before I started the session. And if you have been tracking gold, you know that it tends to do this a lot. It will move sideways for a couple of days and then make a big move on the break. So right now, we have a very short-term target of $4,046 dollars per ounce of gold. But then if we breach that level and we keep moving higher, then the next target will be around 4,137. So a very short-term goal. Then if that is breached, then we move on for the next target. So this is a consolidation we've been tracking for quite a good number of days. And we know whenever we have a break, we go for it. So if you don't know what you're doing, please stay off the charts. We discussed a potential idea here on Monday of an inverted head and shoulder pattern on silver. This was on Tuesday, not Monday. So yes, there was an attempt to break. This happened here on Tuesday, but then on Wednesday we recovered, and today it seems like our idea is now playing out, and this is where we are headed. That is $49.33 per ounce of silver. So now it's accelerating. It's not like the sluggish nature we saw yesterday. So today, even after retesting here at midnight, we are seeing the push happening. So Brent oil has been attempting to break lower, but then some familiar pattern just happened. So normally, you expect that once a market has made a sharp drop, made a pullback to a previous support area like this one, you would expect the market to go up. So you go for a buy trade right here, let's say somewhere around this area. You go for a short trade targeting lower prices, and once the previous bottom is broken, you expect the market to continue lower. So in this case, imagine you put your stop loss right here, or even right here. So if your stop loss was along these lines, you've already been wiped out, then you know the liquidity is moving in the opposite direction. So now, from what I'm seeing in Brent oil, after grabbing some liquidity here, could see it reclaiming some of the grounds that we saw being taken yesterday. And this would be a very interesting price action area, considering that there was a gap here. The market closed the gap and then fell, but also key level support, key level resistance. So a target of around 64.287 could be very interesting, depending on how this plays out, the current candlestick. So for US equities, stress remains the key word. So if you look at, for instance, the US 30 or the Dow Jones, after attempting to break new resistance twice, that was rejected. We moved sideways and then 2 days of drop. Yesterday, an attempt at recovery, but now today we are seeing more of signs that the market is headed lower. So good chance that we see a continuation of the bearish momentum. It seems like the market has entered some form of correction. So corrections don't hold for long. Notice that in the prior correction, the market dropped by what? 4%. And then in the current one, here we are looking at a 2.48% drop. So still more room for downside momentum before we see a boost again, and earnings have been mixed and disappointing, especially from the tech sector. So you look at the Nasdaq, it's the same thing. It had this interesting formation here, which was more of a sideways momentum, and then a break yesterday, a retest of this key level here, and then a continuation lower all the way into yesterday. Another pullback all the way up, which showed signs, really strong signs of recovery. But then today, upon market open, you can see that the market is still insisting on pushing lower. So while this may look as if we are getting into a sideways momentum, overall, even if you look at the week, it has been more of a bearish week. So good chance that we see more bearish momentum until perhaps when the government reopens. So key targets would include various lows at different sessions. For instance, yesterday's London low was here. So this could be a nice target if the market drops, but then we still don't have a lot of activity. So perhaps we watch out for New York open for potential volatility. So SP500 is also the same. You look at the yesterday's price action, a sharp drop, sharp rally, and then a sharp drop. So today we are trading within yesterday's range, and that means that those two should be our targets. Should we see some form of volatility? So if the volatility at New York Open moves lower, our target would be yesterday's low. If it moves higher, then our target would be yesterday's high. So Bitcoin is making some good recovery after bottoming at 98,952. This was quite a rout. You can see that this was a sharp drop, down 15%. Then the 100K level seems to be holding on pretty well. So you look at the price action from yesterday and the increase here. Today it seems to be more of a muted market. So you look at New Zealand USD, still in some form of consolidation, but still losing to the dollar. And if we breach here, then the idea is that the market goes for the prior low that we saw yesterday. So a strong dollar would likely lead to a new low here. And this is a very strong bearish momentum movement. So I think it's the same kind of pattern we saw on AUD-USD right here. So some form of consolidation, and we are about to see some form of a break. So although for AUD-USD, a break wouldn't go all the way down at first, it would just go for the low of day, which was like a high of the Asian session yesterday. So you look at other pairs like the pound, it's really attempting to make a comeback against the dollar. The dollar is still significantly strong. So that's why at the beginning of the session, we talked about the dollar index. And yes, we are seeing some form of pullback here since the market opened. And that has provided some form of relief for the pound here. But this is not what we want. We want a movement such as this one. A very strong bullish movement, in this case for the pound. Though, as we all know, bulls climb a wall, bears jump off the window. So this is a wall of worry. A wall of worry is a market that is rising, but in a very boring way, in a way that it's not like strong bullish momentum. So you don't know whether it's going to fall back down or whether it's going to accelerate higher. So it's called a wall of worry. You're still worried and the recovery is still happening. So yes, the pound is getting some boost. And of course, as we mentioned, for today, if we see more members favoring a rate cut, then that is supposed to weaken the pound and we move further downwards and you form another low. On the other hand, if there's more members favoring holding interest rates steady, then our target would be around 1.31639. So Euro USD, which has been among the strongest currencies for the year, so far it's been pretty well in attempting to recover from the rout we saw with the dollar. But then it's not a key level support yet. If you really clean up this chart, and this is on the daily, then ideally you'd want to see the Euro USD bouncing from here. And that's the last bottom that we saw in Euro USD. But then it's bouncing at an area in the middle of nowhere. So, which makes me very skeptical of the current attempt to move higher. And you will see this coming. Like if you look at the highs over the last 3-4 days, I would say they track a familiar pattern where the market is really attempting to move higher. But every time it gets to the trend line, we tend to see bears incoming and taking control. This leads to the likelihood that the market goes back down to 1.14749. So this is still a pretty interesting idea. And that would also mean the AUD losing to the dollar pound losing more to the dollar. Uh, Dollar Swiss franc is really finding some good support here, but then there's this area here. So it implies that if we happen to see a breach here, the market could drop all the way down. But for now, the trend line is holding, but then the upside potential is getting limited the further upwards we move. So look at the H4 chart. Yes, there's been quite a recovery. The dollar really attempting to recover against the Swiss franc. So in this case, we could be seeing another push. But then if you look at the upper trend line, what has been happening here, over the last 1 day, it's not very consistent. There's some signs of weakness, the market extending more to the lower side than upside. So yes, we have a pretty nice bounce here, but not to be trusted as much. So dollar yen, yes, the dollar has been on a very strong bullish momentum. We discussed an idea of the dollar dropping to this level against the yen, then immediately we had a bounce, and now it seems like the market is headed back there, which basically screams of a range. A ranging market is a market that is moving sideways, and you'd have to convince me that this market is trending. It's more of a market that is generally moving sideways. You just have to define the edges. So the Nikkei 225 index had a sharp drop. This was on Tuesday. On Wednesday, extended the drop with a very strong comeback back to the trend line, and now seems to be continuing further down. So if you're wondering what the trend line is, this has been very definitive over the last couple of months since July. On this other end, we've had a very interesting trend line since the month of July too, with the market finding support mostly along these lines and resistance here. So after breaching to the upper side and remaining there for almost a week, we are back into the trend line. We retested the upper trend line, and now it seems like we have a continuation lower. So I would be targeting this market moving further downwards for the day. And for the UK 100 index, if you look at the daily time frame, this is yet another new all-time high. So the Bank of England is set to make an interesting decision to hold or to cut. So if we see more members moving to cut interest rates, then we are definitely reaching into a new all-time high above yesterday's high. On the other hand, if there's more members looking to hold, we could be seeing some form of panic selling, and prices could potentially drop to 96.88. So I believe we have no more questions. So at this point, I would like to thank everyone who joined the event. Remember to like and subscribe to the channel. If you're watching this on X, like and retweet the live. We always appreciate you when you share. Remember, these sessions happen every day, Monday to Friday at 11 a.m. So we try help you get a grip on the markets, know what's moving hot, what to expect, and what interesting assets you should be focusing on. So other than that, if you don't have a trading account yet, make sure to register using the links in the description below. If you're on X, you can visit FXPesa.com and register for a trading account. It's free of charge. You'll get a free demo, and you can also download our equity app, equity trader app. And sorry, I wasn't supposed to be sharing this. Yes. I just wanted to share this. So if you're a beginner, make sure to check out the Novice to Pro course. It's available on FXPesa YouTube. You can see it right here. Just search Novice to Pro by Rufus Kamau, and this will help you in identifying opportunities. The Bullish Banter podcast continues printing new episodes, new experiences, new information every week. So in our latest episode, we hosted Ibrahim, and he is a very interesting guy in the way he has gotten hold of the entire industry. So make sure to check out the episode, how he became a full-time trader. There's really good lessons to learn from this. And once you do this, remember, sign up for that event on 14th. Let's meet at Westlands. Let's have fun together. So that is it. Enjoy the rest of your day. I wish you a profitable day.